This episode is sponsored by Exactuals, perfecting insurance payments and the data driving them.
I'll put my special interview hat on in a second.
Go for it.
It's very important that I wear my interview hat.
Is that your interview?
Special interview hat.
Yeah.
Yeah, I don't think...
I was sure that it's going to be the top hat.
So that top hat is sadly not very comfortable to wear. Kind of presses at the edge of my head.
You know that it's going into the podcast, right?
That's fine.
There is no chance I'm cutting out.
There needs to be more humanity in the insurance industry. We need to see that insurance leaders are not just figures and numbers people, they're also hat people.
Gotcha. And it starts from the head. So a CEO, founder of an insurance company, he's a human being.
It's sometimes, not always.
Sometimes, not always. Okay, so it's a question of big numbers.
Big numbers, small hat. Gilad, thank you very much for having me today.
Is it just insurance or just?
Okay, so I like to just use the word just, but we're now sort of rebranding as Just Insure, and that's because two reasons. The main reason is that our domain name is just.insure, no comma, just.insure. And the second thing is that we were just auto insurance, but there's an insurance agency in California that does not have very good reviews called Just Auto Insurance. And when people search for us, they find them, and that's not good. So Just Insure.
Okay.
And God, the just bit is very important. Mm-hmm. Not only is it only 4 letters long, but it means, according to the dictionary, fair, moral, and right. And our goal is to build an insurance company that behaves fairly, morally, and rightly.
So was that part of the original thought and branding? So it will be just, not just insurance. You get it, plain vanilla, no add-ons.
Absolutely. The just was a mission statement around morality and about doing things right. And our mission from the beginning was, how do we take insurance and how do we make it so that we are measuring risk directly and not measuring things that correlate on average with risk? And by the way, I am not arrogant enough to think that we are the only people doing this or even the best. However, that is crucial to what we're doing.
When you say that, I just ran in my mind, can you actually do a poll in terms of the brand awareness? If you see it as just as justice or just as that's it.
It's nice to have it both, but it is definitely justice and justice.
Yeah.
Can I tell you a small story? Just.com is currently it's like owned by a domain squatter. So I looked up just.com, looked up on the internet who it's owned by. It's owned by somebody in South Korea or Korea. So I reach out and I say, hi, you're not using just.com. Would you be interested in selling it? And the guy came back and said, I have received an offer of $1 billion for just.com. And I have counter-offered with $20 billion. I said, that's terrific. I said, look, just so you know, the all-time record for a domain name sale was only like $150 million. So I would advise you to take the $1 billion if I was you. Strangely, he's still sitting on just.com and it hasn't gone yet. So maybe the billion fell through.
Yeah, maybe, there are more and more billionaires in Asia Pacific, and kudos to him. That was
I personally
a lot of patience.
If someone offered me, you've got the choice between $1 billion and just.com, I'd choose the $1 billion.
Yeah, I don't mind. $1 billion. I'll pay you the 50% or whatever, how much tax you want on it. And even if it's a fund, I don't know, let's assume he bought it at $12 a year, $20 a year, and he's been sitting on it for 20 years. Still worth it.
At some
as
point,
an investment. Most definitely.
You can't spend it when you're dead.
I heard that. Although there are many trust children that will disagree, but yeah, let's go with it.
Okay, Gilad, what can I tell you, or how can I be interesting?
Well, you've been interesting so far. Great job. So let's start with more background, more information about you, and not just having a collection of at least two hats. One of them is a top hat. Given the fact that I think that you are the third or the fourth person with an English accent on the show, can you give more information about yourself and the fact that you are coming from gaming?
Sure. Well, when you say gaming, sports betting. So there are two.
I was trying to be nice.
Well, now here's the thing. There are professional sports bettors. In fact, there's quite a few professional sports bettors. There's a guy in London with a business called Star Lizard who owns Brighton and Hove Albion Football Club, a guy called Tony Bloom. There's a guy in Tasmania. And these are guys that have made many, many hundreds of millions or even billions of dollars out of sports betting. And they have basically built algorithmic models that result in pricing things better than sports betting companies do. Nobody has built a business around playing roulette. There is no skill involved. There's no way to get any kind of informational edge. Even you guess maybe in blackjack, you might be able to squeak out minimum wage these days if you card count, maybe. But sports betting is still a space where you can have informational and you can make money. So I founded a business called Genius Sports, and what Genius Sports did or does is it produces real-time pricing of sporting events. So in the old days, I don't know if you've ever watched the movie Casino. In Casino, Robert De Niro starts off his career as the guy that sets the lines in sports betting. It's like, so it's going to be the Kansas City Chiefs versus the Tampa Bay Buccaneers, and the line is Tampa Bay +7 or whatever. And he would be the guy, and he would know everything about American football, and he would like who's fit, who's not fit to go through. And there would be this one thing you bet on, and you bet on before the match. But what happened was, particularly in Europe, people got smartphones. The internet meant that there was lots of streaming video. You could watch a game of soccer at any time you liked, or tennis or whatever. And people wanted to gamble on those events as they were going on. And so what Genius Sports did was they built algorithms to enable real-time pricing based upon certain sets of inputs, algorithm, output prices. So that was kind of interesting and sophisticated and great fun. And then the question was, how can we do that with insurance?
Yeah, I was just about to stop you, so I can ask you, and that's the main reason I ask you about sports algorithms and data, because from statistics, how did you take that information, that knowledge into insurance?
Well, ultimately, they are two businesses that are about probability. What is the probability that this team will score? What is the probability this person will have an accident? And again, you are trying to draw as many things as possible. So historically, taking our casino example, you're looking at who's playing and their history and, maybe what the weather's like. Maybe. Now, when you're betting in in real time, you need to bring in more things. Who's on the pitch right now? Where are they standing? Where's the ball? Who is doing a better job of passing? Who's doing a better job of running? You're bringing in all these real-time variables and trying to set prices like with auto insurance in the old days, where you set a price based upon some demographic factors 12 months, to one where you were trying to, in real time, calculate probabilities. And of course, just as the mobile phone enabled people to bet in real time, the mobile phone has enabled us to track driving in real time. Now, again, this is not unique in any way, shape, or form, but you now have the technology in vehicles just through your mobile phone to know when people drive, how much they drive, where they drive, and there are a lot of interesting and predictive things that come out of that. Mostly the interesting and predictive things are not the things that telematics models are built around today. So harsh braking, for example, is actually, as far as I can tell, has no predictive power whatsoever. All harsh braking measures do your brakes work, because right now you get a low harsh braking score if your brakes don't work very well and you slow down slowly. So the predictive models that work really are, or have the greatest predictive things, are where do you drive, when do you drive, where are you driving from and to? Are you driving home from a bar at 2 in the morning or from your kids' school at 2 in the afternoon? And we've tried to bring those things in, and hopefully what we can do as well is we can start then using that to change customer behavior. And I think the really interesting thing about all of the telematics is not about, can I price you $2 better a month? It's, can I change your behavior so that Gilad is 20-30% less likely to have an accident? Because if you can reduce the number of accidents on the road, and you can reduce the cost of auto insurance.
So you touch a little bit about telematics, and we see more and more companies that play in it. Now there is the IPO with Root. We're expecting to see their first public quarterly report after their IPO. I don't really want to jump who is better, who is worse, but what makes you guys special? Because we see that more and more.
So what makes us special? So it's an excellent question. So there are telematics offerings. Let's just do some name checking, shall we? There's some really good next gen stuff from Motion Auto. Some pretty good next gen stuff from Nobler. There is some pretty good to very good driving behavior stuff from Root, and then there's a bunch of crap. I mean, and by crap I mean the stuff that's old and based around just a few metrics of safe driving behavior. There are then also some people that are trying to build things like Loop around where you're driving. Everybody has got something they're reasonably good at. Almost everybody's got something they're reasonably good at. What's unique about us is not our telematics model, although I think that's kick-ass. What's unique about us is the fact that we have reimagined auto insurance around telematics. So instead of being a product that you buy on a 6 or 12-month contract, this is auto insurance that looks like a prepaid phone card. You get your phone, you sign up in less than a minute, you put money in your account, and as you drive around, your balance goes down. That's our model, and the price we give you is good for 30 days, and every 30 days we change your price. And that means we can change your price up or down. And that is a revolution almost in how this stuff is done, because with the exception of Root, everybody else almost has this drive really well and earn a discount, which is a terrible consumer proposition and does not enable you to do the one thing you want to do above all else, which is get rid of bad customers. This should be all about identifying the 20% of customers who are significantly more likely than their demographic group to have an accident and churning them off. That's the business we should be in.
And okay, that opens up kind of all kinds of different problems. But let's start with the good problems. So, which I already forgot what they are, because the moment that you talked about we need to churn them out, it's a little bit of a regulation question in terms of, okay, how do we make sure that everyone is covered? And I heard that in the past by a German company that said, we do our best not to pay claims because that's the way to prevent retention, and the people who submit a claim, we don't want them. And it feels to me that it creates that policy, and then we're going to find all kinds of groups of people that are not insured, cannot be insured.
Well, it's very people can.
Again,
we do not, no matter how bad your driving scores are, we do not offer coverage. So you can be a really terrible driver or still be a price. The thing is, though, that price will be really high. But it reflects the risk. If you lean on your horn, if you drive home from bars at 2 o'clock in the morning, then your risk is high, and I have to be compensated for that. But you know what? If I'm trying to charge you $1 a mile, I'm not the right product for you. Go to Geico, go to Liberty Mutual, go to the General. I'm in the business of finding people who want a flexible product, who want a per mile product, and who have good driving habits. If you're in that category, and it might be a very small category, I have a fabulous product for you.
Now, you mentioned that every month you're offering a new product. A new price.
Correct.
Now, is that
so ours is structured as a 30-day non-renewing contract.
Non-renewing. Now, do you run the calculation again? Do you need to submit a new filing with the regulators every month if you are improving the algorithm?
So every time we change the algorithm, we have to file with the regulators. It is the nature of insurance. And I have backed up in my data. And of course, the problem is it's like this, right? Which is, if I put in 10 different things into my filing, then it can take 6 months to get through the department. So you end up basically putting things more slowly into the filing than we would like, because you need to get something, particularly you need to get new stuff approved. But what's quite exciting about this 30-day model as well is, let's say I introduce, so here's something we're working on, right? I have GPS tracks of vehicles. I know where traffic signals are. So if I basically take if I take Gilad and I say, Gilad, let's pretend it's going a straight line through all these traffic signals, distance to the traffic signal, distance afterwards. If you're going straight through. Now, let's look at all the times when you stop at the traffic signal. How early before did you start to slow down? Let's look at all the times when you didn't slow at all. Okay, those were green lights. Okay, for ones where, and by the way, you maybe go through 10, 12,000 traffic signals a year. So there's plenty to work on over the course of a year. What is the point, distance or time-wise, at which you make that choice between whether to put your accelerator down or put the brake down? Now, I can, using statistical analysis, work out, on average, how far away you make that decision. I don't know yet whether that is predictive. I suspect it probably is mildly. I suspect people that put their foot down when they're further away to try and get through the lights are more likely to have accidents, are more likely to run a red by accident. I don't know that, but it's a reasonable supposition. And that's something that I can measure today. But realistically, what does that add? Really, I mean, 0.5%, I'm going to do it because every 0.5% matters. But really, the big things that allow me to identify with somebody as a driver I want are, do they drive home from bars late at night? It's really not complicated. Do they drive home from sports stadiums late at night? People driving home from sports games, even more or as dangerous people who drive home from bars, usually because they've been drinking in the afternoon and don't realize.
I love that. No, seriously. I wonder.
It's a nice combining of my sporting background and the insurance background.
No, the only thing I'm thinking, if most likely you are not selling in California,
Yeah.
just talking about our lovely city of Los Angeles and the traffic and the accidents that we see here. It's during the day, during the night, and mainly on left turns. Sadly, recently a friend was in an accident during the day. He was out jogging and a drunken driver hit him. Morning, 8 a.m.
That is pretty awful.
Yeah, but that according to the algorithm, that guy was okay because he was coming back from an after party or after.
Well, that's all right then.
Yeah, it was night or early morning drinking.
But it's interesting as well, because you can use telematics. But again, this is stuff that's we're only scratching this. We and Nobler and all the rest are only scratching the surface here. But there are some very interesting telltale signs that you can get with people. I mentioned the traffic lights thing. People who are drunk tend to overcompensate. By slowing down long before they get to the thing, slowing down unreasonably. These are all markers which you can get. And what you've got to do in many ways is, with our 30-day policy thing, we've kind of changed the focus. We're not thinking, oh, how do we improve the retention of the best customers? Because that's kind of what you're doing with the discount game. Instead, we're thinking, how do we identify the really risky drivers? How do we identify the behaviors we really don't like? And I think that's what philosophically makes us quite different from some of the other players here.
So you're offering, I'm sorry, before I jump into that, where are you now? Where are you selling?
We are selling in Arizona. We will be launching in a further 3 to 4 states this year.
Congratulations.
Thank you.
Yeah, that's a big move to step out from the first state and the 3.
Well,
I'll just put my bet on so Arizona. That's where Arizona and Texas. That's where usually people start.
Well, so
Florida, Utah.
Texas will be probably a little later because it's quite big. But in the next ones, I was filling in forms signing forms on Monday for Georgia and Ohio. So they'll be our next 2 states. Look, the reality is everybody with the telematics product has a very similar set of states they'll be launching in, because there's no point in launching in tiny states where there's no market, because it's the same amount of effort to go through the Department of Insurance approvals for Wyoming as it is for Wyoming as it is for Texas, right? You want to be in a state. In our case, you're selling a per mile product where there's quite a lot of variability in some urban areas, because that will appeal to people. You don't want to be somewhere that's too litigious. That counts Nevada out. And you want somewhere that is telematics friendly. So everybody is in the sort of same 5-6 states, And so there's no doubt that on our list as well, coming in the next couple of years, will be Utah and Colorado, because they are, again, relatively telematics friendly.
How insurance companies, the incumbents, compete with you? Is it just partnering up with CMT, Ocho, or Arity?
Oh, well, this is a much overused phrase. We are not selling an insurance product that looks like anybody else. Consumers don't care about telematics. I care about telematics because it means that I can keep the best risks, right? But consumers don't care about telematics. Consumers care about flexibility. Consumers care about ease of use. Consumers care about what they're paying. So what I am selling from a consumer proposition, is something that there is no long-term commitment. That if your car isn't driving, you're not paying. That you don't have to call an agent. You can get it in a few seconds. Everything through the app. Now that's what I'm selling. And also, of course, this idea that you will save money because you're only paying for the miles you drive, which is quite important in a pandemic world.
Yes, and I'm surprised not to see Metro Mile and the other, which is pay by mile, just booming now.
Yeah, Mile Auto. Yeah, both of those guys. But here's the thing, right? The target market for both Mile Auto and Metro Mile is you or me, Gilad. It's basically, you've got 2 cars. If you've got 2 cars, you're probably still only driving 10,000 miles a year, but it'll be 5,000 each. Therefore, I can give you discounts for the 2 cars. It's not a bad idea. People like you and me, we pay our bills on time. We don't have accidents. There are worse ideas. But my view is that actually the market segment that benefits most from telematics pricing and telematics type products is not you or me. It is lower income consumers.
So you started the product when you launched the company with was it second-hand car lots?
Well, so that was the original plan. Reality intervened, and so we launched with a live. And again, this is where my lack of experience in the insurance industry was rapidly became an issue. Fortunately, I learned quickly. So we planned to distribute via used auto dealerships, because having a product where you can get insurance very, very quickly is very valuable. If you go to an auto dealership, they've just sold you a car, you want to get insurance to get off the lot as quickly as possible. But it turned out that you need to have full coverage for that, because you can't be in that space, because most cars are financed without insurance. So we've only just recently launched full coverage. So that is beginning to start moving the dealership channel now. But most of our customers have come. Well, by the way, I mentioned this. I'm very proud of this. Half of our customers come organically or via referrals. Half, and that's because it's a product that nobody else has. It's so flexible, and that's a really encouraging sign from our perspective.
Now you can buy a car online. So is that a good opportunity for you to offer insurance as part of that package, because they sell the car, they sell the financing,
yes,
they sell the entire package?
Anything.
Okay,
you've got to get insurance now. You might as well buy it through us. We can make it really slick. Yes, but actually, I think if you look at our instant insurance and how quick it is to get, there are other markets which are perhaps more interesting. So Turo, of course, right? All of those peer-to-peer car rental companies, they pay horrendous sums to basically insure the cars that are being rented out by their customers. Now, there's interesting subrogation stuff there, but we're not going to get. Let's not go down that line. I spoke to one company that was doing $4 million of revenue, as in $4 million commission. They were spending $1.2 million on insuring their customers' cars, their partners' cars. They are very, very interested in the idea of introducing an instant get telematics insurance product there, and moving that cost onto the consumer, and also making it a much more reasonable one, because it depends on how much you drive, and how you drive becomes the price. And then there are other bits that work really well with as well. Let's say you're renting out your BMW. You might want to say you only want to rent it to safer drivers. The fact that we have telematics that enables us to say that Gilad is a safer driver, that makes somebody more comfortable about renting a high-performance car. So insurance on demand, insurance being distributed by other people. Really, as to come back to the point I made earlier, what makes our product appealing more than anything else is the incredible ease and which you can get it, and the flexibility of it. Telematics, that makes our returns great, but it's not a consumer proposition.
Oh, that's actually a brilliant idea, because what you can provide is something which is similar to not corporate credit card, but the corporate debit card, that you charge it in advance and give that to the employees to use a rental car or a car from their fleet. That's actually a very interesting proposition.
And look, when you get to the prepaid thing and thinking about it in terms of these cards and things, there are other things as well. Let's say your nephew is driving without insurance. You can give him the gift of auto insurance, $30 of auto insurance credit, so he's not driving illegally. There are a ton of interesting opportunities here about being able to get stuff out of people's hands once you are willing to break away from what a traditional insurance contract looks like.
Yeah, I love the fact that you're already cutting it, and there are other niches within the market that you can increase your original value proposition.
Exactly. We've all been at the airport, right? And you're renting a car, and they go, "Would you like insurance with that?" And you're like, "How much will that be?" And they're like, $30 a day. And you're like, "You're kidding me." I mean, I get a month's insurance for like $100, and you want to sell me a day's insurance for $30, right? And I'm renting this. That has some of the highest margin stuff in the world. And by the way, Europe and Aviscar make more money out of insurance than they do out of renting cars. But actually, you know that already. I can be there and I can sell them an insurance product that is better and as quick to get through the phone. Why not? It's a niche, and I can make good money out of it.
By the way, what do you think about the car industry, the car manufacturers? And let's not talk about Tesla. What do you think about Ford, GM, BMW, and these guys that offer insurance as part of their package?
Good for them.
Okay, great.
More the merrier. I think that for people buying new vehicles, for people buying Teslas, they have an enormous amount of data. They will know how much you spend on autopilot as opposed to other things. I think as far as sensor data and driving habits data, and not do a very good job, and amount of driving you're doing. And I think there will be fearsome competitors there. I think they will be weaker in knowing where accidents happen. I think they'll be weaker as well in terms of thinking about some things about, driving back from bars or whatever. But they will be competitors. But here's the great joy about our positioning. Our positioning, and when I said, we are looking, well, whether it's the second-hand car lots or what I said earlier about how the beneficiaries of telematics are lower income consumers, these people are not going to be buying Ford or Tesla or GM, insurance, because they're not buying new cars. They're not buying second-hand cars. They're not buying cars from franchise dealers. They're buying cars from Joe's Autos. And Joe's Autos isn't in the business of selling auto insurance. And the vehicle they're getting probably doesn't have the stuff to get advanced telematics out. You probably use Apple CarPlay. Our customers use tape decks.
Pandemic. So, final question, and that's a question that I'm asking everyone. We've been in this pandemic, this COVID routine. Do you have any book recommendations or life hacks that you can recommend people?
So I read a fantastic trilogy of books by a guy called Ian Toll, Toll, which is about the war in the Pacific, which I highly recommend. You do need to commit quite a lot of time. It took me like 2 months to get through the full 3 books from start to finish, but they were terrific. Life hacks. No, don't get a dog. That would be my principal life hack.
Okay, that's very smart. And what's the name of the chess application that you mentioned?
I think it was just the chess.com app.
Okay, fantastic.
Awesome.
Robert, thank you very, very much for joining me for this podcast.
A pleasure. Take care, Gilad.